Good morning, everybody, and thank you for coming today. It's a pleasure to be here. I'd also like to extend my sincere thanks to the Goa Association of Realtors, Mr. Amit Chopra, the President-elect, and Mr. Ravish Manchanda, the Honorary Secretary of GAR, and all at GAR who've made this wonderful event a reality. So I'm a solicitor from Bombay. I know that it's not fun listening to lawyers, and I hope to make this little chat that we have interesting for you. I'm here to talk about some topics related to real estate. And let me start off by saying that the Indian real estate industry has witnessed phenomenal growth over the last few years, underscoring its position as one of India's most rapidly growing sectors. And you as realtors and real estate professionals play a pivotal role in this story. While the unenlightened may think that realtors only introduce people, and that's where it ends, that's farthest from the truth. You are the engine, in fact, that drive transactions. Your role is not only to introduce, but you wear multiple hats. You act as facilitators, you're a channel of communication, you assist in overcoming transaction issues, you have to undertake transaction management. You problem solve when a deal hits a roadblock. You mediate when there's a breakdown in communication. And therefore, your role is integral. And you know that real estate is a tough business. Apart from your professional obligations, you have new concepts in the real estate business, one of which I'll discuss today in my speech. In addition to that, you're now regulated and you have to comply with various legal requirements. So while this is an exciting time for the real estate industry, it's also a daunting time. And in that background, I'd like to address you today on 3 topics. The first is your obligations and liabilities under the Real Estate Regulation and Development Act, RERA as we all know it, and under money laundering obligations, your contracts with clients and how you should protect yourselves, and fractional ownership, which is a fast expanding business in India, and particularly in your lovely state. So as you know, RERA has been primarily enacted for ensuring transparency in real estate development and to protect purchasers. While it predominantly holds promoters responsible, it also imposes specific obligations on realtors. You know that you have to register yourself under Section 9, and Section 10 requires you to provide accurate project details, maintain records, facilitate transactions in a transparent manner, and follow a code of conduct. Contravention of these obligations can render you liable to a fine, which can be up to 10,000 rupees per day, up to 5% of the price of the property that you are an intermediary for. So while I don't want to scare you, it's the promoters who are responsible for accurate information, for providing promotional materials, for delivering the project on time, primarily under RERA. You are still responsible if you provide false or misleading representations regarding the services you're offering. I don't know if there are any fractional ownership businesses today, but it is important for you to understand that under RERA, you may also be liable if you're promoting any property or development which is registered under RERA or which has to be registered. So just putting disclaimers on your websites if you're displaying properties or telling your clients that you're not responsible won't be sufficient, so do take care. So how do you protect yourself under RERA? In my opinion, there are 3 cardinal rules that you should follow. One is conspicuously maintain records. I know that's difficult, but when you hear about what I have to say about PMLA, you'll understand the importance. The second is do your diligence. Know your client, know your counterparty, and know the property. And thirdly is don't make unsubstantiated promises or act on information which is incomplete, outdated, or incorrect. you'll see how important rules 1 and 2 are when I get to PMLA. Now, how do you safeguard yourself? I have a few suggestions, and you should try and employ this in your practices. One is obtain in writing all information, data, and marketing materials that you're relying on, and cross-check those. It doesn't mean just collecting it. It means do your diligence. Get out onto the internet. It's very easy to find out today. Check the RERA website if it's registered, and check up on the client. The second, if you're aware of any defects in title or technical issues or other problems, please disclose that to your client. It's important that if you have the knowledge of it, you should not conceal or withhold that. Don't act on verbal assurances. You know today that people will promise something, you may act on it, and then you may be holding the baby at that time. By all means, suggest innovative solutions. You are all experienced professionals, you've seen it, you've understood legal, technical, financial, and tax issues, but at the same time, protect yourselves by advising your client to seek their own advice. Create a paper trail. I can't stress more on that today in our environment, that you need to have a paper trail to protect yourselves. While I understand that all of this may be uncomfortable and unwieldy to do, the idea is, as intermediaries, you must protect yourselves. So the next topic I'll turn to is money laundering. We all heard of the Prevention of Money Laundering Act, or PMLA, as it's commonly known. PMLA has been enacted to prevent and control money laundering activities in India by establishing stringent measures for identifying, tracing, and seizing illegally obtained funds. It's rigorously enforced, and authorities enforcing PMLA seriously pursue potential money laundering activities. You, as realtors, are now liable to comply with PMLA rules and guidelines. Before I get into that, I thought that maybe you should have a little background on what money laundering is. So money laundering is basically the act of disguising the illicit origins of funds, commonly known as proceeds of crime, and integrating them into the legitimate financial system. Money laundering is basically undertaken through a 3-stage process: placement, layering, and integration. Placement is the first stage, where illicit funds are introduced into the financial system through various means, including depositing cash into bank accounts, purchasing high-value goods or properties, or making foreign remittances. The goal is to distance these illicit funds from their illegal origins and make them appear legitimate. The second stage of money laundering is layering. This is where the money launderer obscures the trail of the illicit funds through complex and convoluted financial transactions and movements, including transferring funds between various accounts, jurisdictions, and financial instruments, converting cash into other assets such as stocks, bonds, even cryptocurrency. The last stage of money laundering is integration, where funds are reintegrated into legitimate businesses or assets, including purchasing real estate. And the goal of integration is to make the illicit funds appear as legitimate income or assets. The Supreme Court in India in 2022 heard various challenges to PMLA. And I won't get into the details of the judgment, but there's one very important observation that the Supreme Court made, which I'll read out to you. For the purpose of a person being guilty of money laundering, they either directly or indirectly indulge, or knowingly assist, or knowingly is a party to, or is actually involved in a process or activity connected with the proceeds of crime, including concealment, possession, acquisition, and use, or projecting or claiming the same as untainted property. Now, if you look at this language, directly or indirectly, indulging in, knowingly assists, knowingly is a party or actually involved, you as realtors, as intermediaries in transactions, can expose yourself in a transaction if ultimately the principals to that transaction are guilty of an offense of money laundering, and therefore you must protect yourself. In another judgment, the Supreme Court held that money laundering is a more heinous crime than murder because it not only affects a single person, but it can derail the economy. So what are your obligations under PMLA as realtors? Firstly and foremostly, every realtor who is falling within the definition of a real estate agent under RERA and having an annual turnover of more than 20 lakhs is required to comply with the anti-money laundering and combating the financing of terrorism guidelines, which has been issued by the Directorate General of Audit, Indirect Taxes and Customs. The guidelines were first issued in 2022 and have been updated recently at the end of 2023. So what do you have to do? The first is customer due diligence. Know your customer. This means verifying their identities, understanding their business, and assessing the risk of the transaction. Now, if you see that, verifying identities, not too difficult. Understanding the business of your client, not too difficult. But assessing the risk of the transaction is a very subjective consideration. And therefore, it's extremely important for you to understand the transaction and who you're dealing with. The second thing is, as I mentioned earlier, maintaining records. And that's a thread that goes through all enactments today. So that means not only records of the transaction, the property, the parties, the financial transactions, but you have to retain those records. And if regulatory authorities call for them, you should be able to produce them. The third, which is a tough one, is reporting suspicious transactions. And that you have to do within 7 days of you having reasonable grounds to suspect that the transaction involves proceeds of crime, money laundering, or terrorist financing. And what are the transactions that you have to notify the government and investigative authorities for? Any transaction where cash is involved, either in domestic currency or international foreign currency of more than 10 lakhs. Any series of transactions in a month which crosses 10 lakhs and which individually may be less than that. Any cash transactions where any forged or counterfeit notes or valuable securities or documents are involved, and documents could mean title deeds as well. Any suspicious transactions by way of deposits or credits. Any suspicious transactions where no monetary threshold is involved, but involves virtual digital assets, cryptocurrency, whether or not made in cash. Cross-border wire transactions of the value of 5 lakhs or more. So the above are transactions where you are duty-bound to inform the government if you have knowledge of the same. In addition, your responsibilities and liabilities under the regulations also include counterterrorism and financing measures. You are required to comply with them. You cannot enter into a transaction with a client who matches any person in the sanctioned list or banned entities or with reported links to terrorists and terrorist organizations. And therefore, this requires you to do your KYC and also check government websites and, of course, media to see who you're dealing with. The last obligation that you have is training and awareness. So your employees, your officers, are required to also comply with PMLA and counterterrorism obligations. And you can take shield under the fact that your employee did it, you didn't know. So what do you have to do? You have to train them to identify suspicious transactions, conduct customer due diligence, reporting obligations, and basically to follow exactly what I said earlier. The idea of this is not to scare you. You're intermediaries, you're businessmen, you want to run your business, but it's just to enlighten you that the world is changing today. And it's no longer that casual and relaxed attitude where you have a transaction, you represent somebody, and it ends there. It is important that you know your customer. It is important that you maintain a paper trail. It is important that you're prudent in your dealings, whether it be with the developers you represent or the landowners you represent. It's important that you shouldn't get involved and get into a mess because of somebody else's actions. So I've covered RERA, I've covered PMLA, and the next topic of mine will be, I think, a little happier for you, is your contracts with your clients and how you should protect yourselves. So before I get into a few suggestions, let me stress first that in law, your protection lies in the contract that you have with your client. Most people take this a little lightly. They have a standard format, and that's fine. Nobody's saying you have to go to a lawyer. But you should be cognizant of the fact that your contract should be clear, precise, and cover various aspects that protect you. And protect you not only commercially, but protect you in this regime of PMLA, RERA, and other legal compliances. You must understand that, like I am a solicitor, you are also a professional, and the type of contracts that we have are called personal contracts in law. That means that there is no specific performance. As a solicitor today, I can't compel my client to retain me, and neither can my client compel me to act for him. The same applies to you. So therefore, if you enter into a contract and let's say your client defaults and you're unprotected, you can't go back and force him to retain you again. And therefore, there is an importance of having a solid contract in place. So there are a few principal provisions that I would recommend, some of them, of course, which you will know. One is, of course, your scope of work should be precisely mentioned in the contract. What you're going to do, what you're not going to do. Secondly, of course, your fees. And it doesn't mean even the rate or the amount, but how it is to be paid, when it is to be paid, whether it's on deposit, whether it's on completion of the transaction, and of course, what happens if those fees are delayed or defaulted upon. The next point is representations and warranties of your client. What's important here is to cover yourself on certain aspects that will protect you in the case of any investigation or action. So one representation would be your client's right to enter into the contract and there being no legal hindrance. The second would be disclosures under RERA with respect to the project or even in respect of the property if it's not RERA registered. The third and the fourth are PMLA related. So one would be that the client has not committed any breach of foreign exchange laws, is not under investigation, has not received any notices, and the fees agreed to be paid to you are not and will not be the proceeds of crime or of any activity related to a scheduled offense. And why is that important? Because the Supreme Court, in its judgment, has held that the onus and obligation of proving that you were not aware that you have received tainted funds or money that has been laundered is on you. Now, it's impossible. You can't go into the financial background of your clients. You can't ask them for accounts. But the least you can do is obtain some kind of representation that these are not tainted funds. The next contractual obligation that I would suggest that you incorporate in your contracts is that your clients should be liable to provide you with complete and accurate information regarding their property or project, and that you are relying on that same. You don't have to make your own inquiries. You should also incorporate provisions for limitation of your liability, because a lot of people think that if my contract says that I have to be paid so much, it ends there. But if something goes wrong, in law, your client can claim damages, compensation, reimbursement of expenses. So it is important to limit your liability. As far as general provisions are concerned, obviously confidentiality, termination provisions, governing law, interest in case of delayed payment, your right to suspend services if you're not paid, and the final point is dispute resolution. Now, as I mentioned earlier, we are all service professionals and there is no specific performance. So if you're not paid, what happens? Obviously, going to court is a long, drawn-out and expensive process. So I may suggest to you that there is an easier alternative, which is arbitration. Now, a lot of people will wonder, why arbitration? Well, arbitration today, under the Arbitration Act, can be a simplified and short process, which is called fast-track arbitration. So if you have a significant material, monetary interest in a contract and you want to protect yourselves and you want to recover that in case of a default, then a fast-track arbitration could be the way to do it. So as far as contracts are concerned, my final thoughts to you would be, is you don't need to have a detailed or a long contract, but protect yourselves with the basic provisions that I've suggested to you. So now, today, I'll come to my last topic, which is fractional ownership. I'm sure all of you have heard about it. I mean, there may be a few fractional ownership businesses here. And I'd like to sort of demystify what it is and discuss with you the importance of fractional ownership and new concepts in India. Goa, of course, is a beautiful place. We heard that from Mr. Prabhu and Mr. Godino. And I can see from living in Bombay that it has acquired so much importance. Well, fractional ownership is a business today which obviously is going to turn its attention to a lovely place like Goa. It's not an unusual or new concept. It may be so in India, but internationally, fractional ownership has been around for a while. Jurisdictions like the United States, the United Kingdom, Portugal, even Dubai have embraced fractional ownership and even legislated around it. For example, and you'll know about Portugal, till recently you could apply for a golden visa by buying a property in Portugal. Now, what did people do? They would either buy standalone properties or they would invest in hotel apartments. And hotel apartments are, in fact, fractional ownership, where you buy into a hotel project and you have a right by virtue of your shareholding to own a hotel apartment. So it's not a new concept. It is something that is prevalent. And in fact, it is not unusual. So take, for example, a situation where you and your friends or your colleagues find a property that you like. Each one of you may not have the money to buy it independently, but you may get together and buy that property by investing your own separate funds. Well, that is fractional ownership. The only difference is that in the fractional ownership schemes that we are looking at today, there is a provider and an organizer who brings people together. That organizer not only brings the people together, but helps source the properties, manages the entity, which I'll get into in a bit, which owns the property, controls everything, and even maintains the property. The idea is that rather than getting into business with your friends or your colleagues and buying a property, you get into it with total strangers, and there's somebody who's organizing it and managing it for you. You may ask, why fractional ownership? What's the reason? Well, looking at the real estate sector today, businessmen, developers, investors are looking for different concepts and different avenues. We see that with warehousing, where funds are being set up to set up warehousing businesses. We see that with investment platforms for senior living. So fractional ownership is one of the similar concepts where people want to invest and try it. From a personal perspective, somebody who wants to invest in a fractional ownership scheme may want to diversify his portfolio. Therefore, instead of buying one property in Goa, he may want to have an interest in a property here, something in Lonavala, something in South India. So therefore, it allows people who want to spread their investments to do so. The second thing is to spread risk, because today if I put all my money into one property, I may feel it's not worthwhile, it's not safe. So therefore, a market is being created where people spread their risk across various properties and jurisdictions. And the last, of course, is lack of funds. I may not have enough money to buy a villa in Goa, and therefore, if I want to use it for a few weeks or a few months, what do? I buy it with somebody else. So let me also explain that fractional ownership is not just limited to holiday homes. It's being expanded into purchase of land, commercial assets, offices, and even residential flats. Typically, people are looking at it from two perspectives. The first is I want a place where I can use and live for a few weeks or a few months a year. The second is I want an investment opportunity. I don't want to live there. I would like to own something which may appreciate over time or which I may get a return by way of rental income. The important thing to understand is that fractional ownership is not a timeshare. You actually own the property through a vehicle. So unlike a timeshare where you buy into a company and they allow you to use it for an X period of time, you actually have the benefit of ownership of the asset. In simple terms, to summarize, a fractional ownership scheme allows a group of investors through a common provider and platform to participate in a real estate investment. The other hallmark of a fractional ownership scheme which appeals to a brand of investors is ease of entry and exit, something which has always plagued the real estate industry. When I buy a property, I may feel that over a period of time, my investment will grow. But what happens if unforeseen circumstances arise and I need to sell? Then I have to go out into the market, find a buyer, complete the deal, find a solicitor, and we're always a pain. And therefore, there are people who feel that I don't want to invest in real estate as one of my investments. I'll buy real estate for my own personal use, for my office, but as an investment, maybe not. And therefore, fractional ownership opens up real estate to a different type of investor, one who feels that I have surplus money, I don't want to put it into the stock market, I don't want to put it into anything else, let me try and invest in real estate. I don't have to put a significant sum of money in. So therefore, it allows me ease of entry and exit, and I'll explain how that works in a minute. So I'm going to get into the key elements of a fractional ownership scheme as we see it today internationally and in India. The first element is the provider or the organizer, the fractional ownership company. The fractional ownership provider will create the platform first. So it may have a platform where it wants to invest in several properties, or it may want to do it on a property-wise basis. That depends on the kind of documentation that the provider will devise. Sometimes there'll be different platforms, one which is limited property-wise and one which has several properties. The second thing the provider does is bring the investors together. And as I said earlier, there will be a disparate group from different parts of the country or different parts of a city. The third thing is sourcing the properties. So if I have, let's say, 50 lakhs to invest, and I want to invest in Goa, and I go to a fractional ownership provider, he will look out, maybe enter into understandings with developers, and find properties which you can then invest in. The next thing is the vehicle of ownership, which I will also come to next. But the fractional ownership provider will manage and control that vehicle. Why, you may ask, is because if there are a group of people who don't know each other, who've never met each other, How will they manage a property together? Obviously, the fractional ownership provider will do that job for them and also control them. Because if, let's say, you have a property that is to be used several days a year by different people, how are you going to monitor the usage? How are you going to monitor the payment of liabilities and other aspects? The third thing is property management. Now, in some cases, a fractional ownership provider will manage the properties also. If it's meant to be given out on rental basis, they'll run that. If it's meant to be maintained from day to day, they'll do that, like an Airbnb. In some cases, they will also outsource that to other agencies, Stay Vista, etc. Now I'll come to the next element of fractional ownership, which is the vehicle of ownership. And this is a very critical element. The vehicle is the entity in which the property will be purchased and in which the investor will have an economic interest and share. There are a number of factors that will determine what vehicle will be employed. In India, we have limitations because we don't have the legislation in place to provide for vehicles like in Singapore, where they can be multi-departmental and ownership structures within that vehicle. So we're really limited to limited companies and LLPs. And each may be preferable depending on the type of fractional ownership scheme. So I'll give you a couple of examples. If I'm interested in using a property and also the same being rented out, a limited company may not be the ideal method because there is a double taxation liability, and therefore an LLP may be an easier way to own and manage that property. However, if I'm only looking at long-term appreciation and not rental income and not usage, a limited company could be a better option because there's an ease of entry and exit. The next part is the management control. So management control, as I mentioned earlier, is one where the fractional ownership provider and organizer not only manages the property, but actually manages the company or the LLP. And the importance of that is that you don't want individual unknown persons fighting with each other or having to collaborate with each other to manage. So typically the fractional ownership provider will take control, will own the shareholding or an interest in the LLP, and will act as a director or a designated partner. That the ownership, the management, the maintenance, the collection of liabilities, and the marketing of the asset, if it's to be rented out, are under independent control. As far as fractional ownership schemes are concerned, what are the things that you need to look out for? Obviously, there are going to be a lot of providers out there, and therefore the first step I would say would be to do your due diligence, see who you're dealing with, understand the scheme, understand the documentation, and understand what your potential liability would be as intermediaries. It may be something that is not worth getting into if you find a fractional ownership provider who doesn't have his act together or is dodgy. To get to whether the fractional ownership concept in India will take off, I think it will. I think it's already been there for some time in an unorganized manner, and now it's being done in an organized and systematic way. You have SEBI, for example, who has come out with regulations on certain fractional ownership schemes, and I see this growing over a period of time. But it's a new concept. It'll take a little time, and it'll take a little bit of warming up to understand it. The other challenge is, of course, managing investors. And having been involved in structuring fractional ownership schemes, One of the concerns I have is that you have a fractional ownership business where people jointly enjoy the property can be a challenge. The legal framework in India also does not presently allow for too much flexibility in schemes, but I believe that that will change over time. Now, what does this mean for you as realtors? Is it something that you should avoid? Is it something that you should explore? Well, my view would be it's here to stay, and therefore you should consider embracing it, but in a prudent and a safe manner. If a scheme is properly structured, is properly managed, it will be beneficial for the real estate business because it will generate demand. The frequencies of transactions in places, beautiful places like Goa, will increase, and it'll throw the doors open to multiple investors who ordinarily wouldn't have had the resources to invest in expensive real estate. So I would say keep an open mind, embrace the fact that in any sector and industry, there'll always be change, innovation, new ideas, and new concepts, and definitely one should embrace that in one's work and business. Well, I thank you for hearing me out. I hope I've not bored anybody. It's been a pleasure, and I look forward to addressing any questions you may have.
The obligations on all realtors regarding customer due diligence, extended due diligence, record keeping, and reporting are mandatory with respect to realtors having turnover about 20 lakhs.
Yes.
Most of the people may not be having that much turnover. So whether they are relieved from this responsibility?
So let's divide this into two parts, right? One is obligations under RERA, and the second is obligations under the Prevention of Money Laundering Act, right? And also in terms of terrorist financing, etc. So if you're a registered real estate agent under RERA, you would have to comply with record keeping, you would have to follow a code of conduct, you would have to maintain transparency. And you know, let me tell you, it's even in our profession, right? Over a period of time, solicitors have had to become much more careful with who they deal with. I mean, there was a time when nobody really thought of taking a KYC of a client. No one really thought about deals where you know, clients were transacting in another way, right? But today we have to be careful in this regime. So I would say that even if you're not required mandatorily to comply with PMLA, to some extent, it's important. You may not want to keep records, or you feel that you need to, but I think be vigilant and be careful, because you don't want to get tied into a situation where, because of some other third party, you're dragged in. So I think the bottom line would be sensible, keep your eyes open, know who you're dealing with. If you feel that there is something or somebody that is, you know, not above board, step back, take care. That would be the advice I'd give you. Look, you know, not looking at the fact whether you're statutorily or not statutorily liable, because today PMLA is rigorously enforced. And therefore to say, you know what, I'm under 20 lakhs, I didn't know, would be tough to say.
Good afternoon. Good morning. Given that land prices in Goa have become so high, and many landlords are still caught up in the previous...
A little louder?
Sorry. Given that land prices in Goa have become very high, how do realtors protect themselves from landlords who want to transact with large sums of money off the record? And what should real estate realtors do to protect themselves and in the light of all this?
Okay, that's a loaded question. So let me tell you today that places like Goa are, you know, standing out amongst the rest of the country. And I think people know that transactions are not entirely, you know, in official consideration. And therefore, you as realtors, well, whether it be Goa or anywhere else in the country, but you as realtors need to take care. You cannot be indiscriminate with how you operate. If there is a transaction where, unfortunately, there is that kind of element involved, I would say it's not something you should promote. It's not something you should get intimately involved in, because ultimately you're not the beneficiary, and you don't want to get into difficulty. Yes, I think that realtors need to be very careful. In many transactions today, the first person who's caught is the intermediary, is the professional, is the chartered accountant, right? So therefore, you guys are going to be targets in a scenario like this. And when you're dealing with landowners who are behaving or speaking or acting indiscriminately, yes, you must be careful. In fact, I would say that you should act in a manner that you advise them that what they're doing is unsafe, is not prudent, and could get them into difficulty. We live in a very different regime. We're a more regulated country than we were 10 years ago. The compliances that we are liable to satisfy are far more. And therefore, the last thing you want to get into is a prosecutable offense or your liberty being taken away. It is serious, and you should not take it lightly. I mean, I hope I've answered your question.
Good afternoon. Myself, Ramesh Toshniwal from Pune. This is regarding the fractional investment. The first part is that it is a very lucrative for the small investors. But, hello, what are the challenges I see is regarding the exit. They are not, the operators are not that much clear about the exit of the investors. When we ask to the operator, they say that it will be placed, or it will be, the property will be only placed among the investors, which are the existing one. So I feel some challenges in exit of the investors. So enlighten on the same.
So that's actually a very, very good question. And whoever is promoting that scheme, I think, would be making a mistake by saying it should be only amongst the other investors. So typically in a fractional ownership scheme, the first right is always given to the organizer or the provider and the other investors. So let's say I've invested. It's a good scheme. If one of the other co-investors wants to exit, why not? I may want the first right to buy it, as long as it's at a market price. But then to say it's only in the investors, that I would not agree with. I think that it can be in a stage-wise manner. You give the organizer an opportunity to first put it on the platform and the other investors to buy, and after that, then the person should be free to market it.
Good morning, sir. That's all for now. I'm sure Virenji would be more than happy to answer all your questions during the lunch break. We'll take it after. Sir, request you to please say center stage. And all questions, he'll be more than happy to answer it during the lunch break, because we have an action-packed day. So I'm now going to request Alan Vegas to please step forward to go ahead and felicitate Virenji. Also, the quiz has gone live on your app, so make sure you go to Narugate 2024 app, go on the menu, open the question and answer the quiz question. It's going to be live for a minute.